Welcome back to the Wall Street Podcast. Today, we're digging into a really critical analysis from Goldman Sachs. It's certainly got investors talking.
That's right. On August 7th, 2025, bright and early, 5:00 a.m. Eastern, Goldman released their NVIDIA Corp. NVIDIA FY2Q preview. The analysts were James Schneider, Anmol Makar, Chris Kress, David Balaban, and Luya Yu.
And this report, it really focuses on key investor expectations, right? Financial projections, what might move the market around NVIDIA's upcoming Q2 earnings.
Exactly. It covers the Blackwell chip ramp, gross margins, the whole China question, plus updated estimates and risks. It's quite comprehensive.
Okay, let's unpack the core areas investors are really scrutinizing here. What are the main focal points, according to Goldman?
Well, the report highlights three key things for the earnings call. First, the shape of that Blackwell ramp in the second half of this year.
Yeah.
And also the timing for introducing the next-gen ribbon chips, expected sometime in 2026.
Okay, Blackwell ramp and ribbon timing, what's second?
Second is China. Specifically, the timing of the H20 chip ramp, that's their tailored chip for China, and what its future contribution might look like.
Still a big question mark, that one.
Definitely. And third, any potential gross margin benefits. This could come from H20 inventory that was previously reserved. They estimate that at around $2.5 billion.
Interesting. Now, expectations are high, we know that. Investors seem largely long NVDA. How do Goldman's own estimates stack up against the street?
Goldman's quite bullish, actually. They've raised their data center revenue estimates by about 8% on average for the next 2 quarters. They're projecting $41.9 billion for Q2 and $51.5 billion for Q3.
And how does that compare?
Those figures are 2% and 8% above current street estimates, respectively, so they're ahead of the consensus. And their overall revenue and non-GAAP EPS estimates for fiscal 26 through 28, they've bumped those up by an average of 7%.
What's driving that increase?
Mostly higher hyperscaler CapEx estimates. They expect the big cloud players to keep spending heavily.
Makes sense. Let's circle back to China. You mentioned the uncertainty. What's the potential upside if things clarify?
Right now, Goldman isn't factoring any China contribution into their main estimates because of the license situation. It's just too uncertain. But they estimate that if licenses are granted soon, it could add around $20 billion in revenue and maybe $0.40 in EPS for fiscal 27.
So a significant potential boost waiting in the wings.
Absolutely. Latent potential is a good way to put it.
And what about the price target? Did they adjust that? And what risks are they flagging?
They did raise the price targets up to $200 now from $185 previously.
On what basis?
That's based on applying a 35 times PE multiple to a normalized EPS estimate of $5.75. Shows confidence. As for risks, the main ones are, well, a potential slowdown in AI infrastructure spending, increased competition.
Leading to share or margin erosion.
Exactly. And the ever-present possibility of supply constraints. Standard risks for a hardware leader, but definitely things to watch.
Okay, thinking about the earnings release itself, what does the report suggest will really dictate the stock's immediate reaction?
It seems the key driver for short-term movement will be the guidance for the fiscal third quarter, specifically any upside driven by the Blackwell ramp, excluding China.
So core Blackwell performance is paramount.
Yes, and then any extra details on China revenue or related margin impacts will also be very closely watched.
Got it. Now, Goldman revised hyperscaler CapEx estimates upwards quite a bit for FY27 and 28, $60 billion and $90 billion increases. They mention a 40% drop-through for NVIDIA. What does that mean exactly?
Yeah, the 40% drop-through essentially means Goldman expects NVIDIA to capture 40% of that increase in hyperscaler spending. It's their estimated share of the incremental CapEx dollars.
Okay, so that translates directly into...
It translates into an additional projected $24 billion for NVIDIA in FY27 and $36 billion in FY28, just from that increased hyperscaler spend.
Wow, significant numbers.
Very. Though interestingly, they're also being a bit more conservative on AI startups now, slightly reducing estimates there for the same periods.
The report also mentions a shift in the debate around the stock post-earnings, moving from how good can 2026 be to what's the direction of travel in 2027? Why that shift?
Well, it suggests that a lot of the good news, the potential upside for 2026, is increasingly getting priced into the stock already. Goldman's own FY27 EPS estimate is now $6.75, which is pretty substantial. So the market's starting to look further out.
Looking for the next growth narrative.
Exactly. Investors want data points that can help quantify growth well into calendar year 2027 to understand the longer-term trajectory beyond the immediate Blackwell cycle.
Stepping back from the market specifics for a moment,
Mm.
how might all this, the huge capex NVIDIA's performance, actually impact daily life for, the average person?
It's a good question. These massive investments in AI infrastructure, things like the Blackwell ramp and all that hyperscaler spending, they directly fuel the AI applications you and I interact with. So you're likely to see faster, more capable AI assistants on your devices, better personalized recommendations, maybe more tailored online services.
They're beyond consumer tech.
Oh, definitely.
Eh,
It accelerates development across the board. Think healthcare diagnostics using AI, improvements in autonomous driving systems, scientific research. It really underpins a lot of technological progress. Fundamentally, it shapes our digital world. The continued expansion of data center compute and networking reflected in these numbers, it just underscores how foundational this tech is becoming for the entire economy.
Indeed. It really sets the stage for the future, doesn't it? The question remains, though, how will this relentless acceleration in AI development and the massive investment behind it continue to reshape not just industries, but our everyday lives in ways we probably haven't even considered yet?